It's really interesting because if you follow the markets closely, you might have seen the initial reaction to this. Markets opened on Wednesday down pretty significantly and closed actually up barely, but closed up. Afternoon and happy Thursday. We have so much to cover this week with consumer sentiment, inflation, jobs week, advanced GDP figures, some big earnings, and a few more things as well. My name is Brandon Steele, financial advisor with Mainsail Financial Group, and our goal is to make sure to try and leave you feeling more empowered after every interaction with Mainsail. And this kind of weekly update is an opportunity to share a little bit about what we're watching in the markets, hopefully strip out a little bit of the noise as well, and really focus on the things that are moving markets the most. And this week has a ton to cover, as I mentioned. So I'll start just maybe with the easier items to cover. So last Friday, we had consumer sentiment, and then on Tuesday, we had consumer confidence. And so I want to cover both of those data points. In short, they were both down, not unexpectedly. I think that this was generally expected from the market, but either way, consumer sentiment on Friday was down. And then fast forward to Tuesday this week, we also had consumer confidence down. And the reason that's important is not to worry so much about one reading, but over time, if those numbers continue to slip, a lot of times what that translates to is less investment, less spending, things like that. Now, so far, that's not really been the case, but nonetheless, it's a thing to watch because the longer that goes, the more likely that we start to see it affect some of those data points as well. We also kicked off Jobs Week, of course, this week, so bear with us a little bit. Tomorrow we get the non-farm payrolls data, so we'll definitely be spending more time next week to round it out. But we did have the ADP employment report come out on Wednesday. This shows that we only added 62,000 jobs. Likely a little bit of this due to the impacts of DOGE and employment on that side of it. But we also had job openings come out down quite a bit. On Wednesday, I believe, is when we got the job openings data. But this number is still extremely high, something a little over 7 million job openings still at the moment. Again, those two things would suggest, well, more specifically, I'll mention the ADP employment report, which suggests slower hiring. That said, we'll see what comes out on Friday tomorrow, because that non-farm payrolls is maybe a little more accurate measure typically. Although take that with a grain of salt too, because those have been revised and revised and revised. Last thing to mention before maybe the big item on GDP is we also had inflation data come out this week. So just yesterday we had PCE index data come out. It basically showed flat for the month, believe it or not. So both the headline number and the core number, which takes out food and energy, both of those numbers were flat for the month. Now, we do have some CPI data coming up here soon as well. So we'll look at that and how that translates to some of what we're seeing on the PCE side of inflation data. But very interesting to see that. Likely, maybe tied to some of the stuff I mentioned earlier with consumer confidence and spending and, how that translates to inflation. But the big news this week was the GDP numbers that came out yesterday. So this was an advanced, keep that in mind, advanced GDP estimate for Q1 of 2025. And basically, it actually came in minus 0.3%. Now, this is an annual rate, so annualized out, but it's the first contraction we've seen in a while. That said, I think that there's some things to read in between the lines on this data point. And it's really interesting because if you follow the markets closely, you might have seen the initial reaction to this. Markets opened on Wednesday down pretty significantly and closed actually up barely, but closed up. So we had a huge reaction immediately to, I think, generally this GDP number. And it very quickly, I think the market caught on to what I'm about to share as well. So although this number looks not good on the surface, the reality is that imports have a big impact on GDP, and imports are a negative impact to GDP. So the reason I'm highlighting all of that is because a lot of companies over Q1 have been fast forwarding a lot of their imports to try and get ahead of potential tariffs that could be on the horizon. And so we had a huge spike in imports. Imports were down somewhere, it's like 4.8%, something like that, just shy of 5%. So if we take out the imports data from the GDP, which isn't quite fair either, but obviously it is an anomaly, it would actually suggest that GDP would have been up for the quarter. Now, for context, if it helps, in Q4, imports were up slightly, just barely, just over not even 1%. So hopefully that gives you a little context of how imports have looked, at least last quarter anyway, but that does impact GDP pretty significantly. So don't get me wrong, it's still an important data point to watch, but take the headline number with a bit of grain of salt because there's a bit more going on under the surface there. Which will tie into our question of the week from Julie, which is basically talking about stagflation. So I'll come back to that. But before we get to that, be sure to tune in next week. We got a lot again next week too. We have non-farm payrolls tomorrow, so we'll share a little bit more about how that kind of ties to the ADP employment report. And then, of course, the big one is we have the Fed meeting next Wednesday, or Fed press conference next Wednesday. But before we break for the week, great question of the week from Julie. Basically, I'm going to kind of cover stagflation as the general core of the question. And first, I'll share what is stagflation. So stagflation, I mentioned this a couple months back, that we may start hearing a little bit more about this term. And based on the recent GDP numbers, it's starting to come to the surface again. So stagflation is basically suggesting slower growth and higher inflation. That's kind of the general recipe, so to speak, for stagflation. And slower growth, meaning really GDP. Maybe that's the best measure to reference when we're talking about that. So, of course, with a headline GDP number of a contraction here for Q1 so far anyway, again, estimate, but either way, this started bringing this conversation to the surface, and this is why Julie asked this question, which again is very timely. So hopefully that paints the picture for what stagflation is. Now, part two of that is, are we going into a stagflationary period? I will share, I think it's a little early to say yes or no to that. For those who do pay attention regularly, we actually were a little concerned about this a long ways back when inflation was really picking up. Nowadays, inflation is still relatively high, but it's not, we're not talking significant inflation. So it is possible inflation could pick up. Now, that said, tariffs, if they do come into play, we could see people spending less, and maybe there's an offset of inflation besides just the general textbook version of how tariffs could impact it. But it's something to watch. Now, I think you'll start seeing more and more headlines with this term in there. So just be prepared for that. I think it's a kind of a scary term, I think. And so the media will love that. But just be aware, I don't know that it's fair to call that quite yet. Again, especially with the inflation number we had on Wednesday, we showed flat for the month. Stagflationary periods go back to the 70s where we had really high inflation. Back a couple of years ago when we were talking about a little bit more here at Mainsail, it was because inflation was significantly higher. If inflation is 3% and we have slower growth, to call that at stagflation may be a little bit of a stretch. But hopefully that helps. Very, very good question. Great timing around it as well. And I know this was a heavy session here this week with all the data, but hopefully that helps. And be sure to tune in next Thursday, where it'll be a little bit more of a zoomed out view, kind of a debrief on the Fed meeting more specifically. In the meantime, if you're in the Pacific Northwest, enjoy your Thursday here. It's supposed to be in the 70s, so enjoy the sunshine, enjoy the upcoming weekend, and we'll see you next Thursday at 3.